Hello and welcome to the November monthly market update hosted by Kingdom Focus Financial with our hosts Michael Smith and Chuck Etzweiler. Take it away.
Hey, thanks, Derek, and thank you everybody for tuning in this month to see what's on tap. I think we've got some very interesting information to share with you this month. As I'm sitting here working through this, we're staring down the barrel of our federal elections that are taking place, and also some state races and things that are just as important. But the focus seems to be on that presidential race that's coming up, and we're going to share a little bit today about the market. You've heard, if you've watched the last couple of months, how the economy tends to react to these a little bit. And so we're going to hone in on that again today as we move forward to try to help get you through this. But most importantly, I want to start off with by saying I encourage everyone to take advantage of the great freedoms and privileges we have here in the US by getting out and voting or sending in your vote by mail. And by the time you're watching this, you would have had to already have put that in the mail so that it gets there in time. But looking forward to see what the future holds for us in doing that. Chuck, how are you doing today? It's good to see
I
you.
well, thank you, Michael. It's always a pleasure to see you, and I'm doing great. Thanks for asking. I'm really looking forward to bringing this information to our clients and investors.
All right, so let's kick it off and let's get going. And of course, we need to make sure we keep our compliance friends happy. And I want to remind everyone that these are our opinions, right? This is what's impacting the thoughts that go into the portfolios. And it's not to be misconstrued as any specific advice for you. If you want specific advice for you, you just need to call, reach out to us. We're happy to talk to you individually. So, first thing, here we are. It's November. We've been working through a theme for this year, four, right? And how's it working? I mean, if you go back, you've been paying attention, look at your portfolio, where it's gone, how we position things. I'm saying it's worked pretty well, right? This has done us well. The accounts have done well throughout this year for the most part. We've had more wins than we have losses so far in our portfolio selections and pieces. And so we're going to follow this through the next couple of months. But we're already starting to look ahead to 2025. And so stay tuned. Come back next month. Next month, we plan to introduce what we're looking at for 2025. We need to get past this election before we kind of know which direction we're going to head. But the Fed policy and oil, the US dollar, reshoring, those all were very critical components and pieces in how our economy in the US um, did this year. And we're going to recap that a little bit, but we're going to use November to talk about the election impacts, maybe help give you a little Pepto-Bismol for that election stomach, right? That's coming as we move forward. So, Chuck, why don't you just dive in and share some of the data that we want to remind people about this month?
Certainly, Michael. And we've spoken to this slide in another format before, but I think what it shows people is you go to the middle of the chart, you see the 1.71% average annual return for the S&P 500 in the month of July. We call that July Jubilee. And then that downdraft, Michael, of on average over 1% to August angst. And then you went to September, right? September mourn. So we've gotten through both August and September with decent returns, let's call it. So now we're going to focus on the months of October, certainly November and December and January. And I think what I would take from this slide, Michael, and certainly there's never any guarantees, better days lie ahead once we get through this election. We get the very holiday jubilee, if you will, of the sentiment of investors. We get the famed Santa Claus rally and the January effect. So November, December, and January seem to be, at least on average, historically good months for investors.
Absolutely. And this chart, we've talked about how we rank the months 1 through 12, right? Well, I'm going to split up and say, let's rank quarters, right? And so we've gotten
Wow.
through Q3, which is by far the most volatile, top to bottom. But if you look, fourth quarter is the only one that doesn't have a potential average negative, right? And so we're moving into historically one of the best times of the year, fourth quarter bleeding into the new year. And it's no different in a federal election year. in reality. And so I'm kind of excited about what lies ahead. Obviously, it doesn't always work this way, but everything is looking like things should function pretty normally.
Now, here's that chart, Michael. My goodness. What type of year we had this year, right? It's 20% or more. So what would an investor normally think to themselves? We're up so much right now. Why don't we just pack our bags and not have to worry about the rest of the year? So what we did is we went all the way back to 1928. So there's been 16 years, including this year, when we've had a 20% or greater year-to-date return through September. So you can see in those little gold circles, what is the median, which is a better way to measure statistical, what's called average, going out between September 30th and December 31st. Well, the median is 4.1% when you've had years of 20% or greater up through that period. The thing you pointed out to me when we were in the green room prior to actually going live, the percent of positive is nearly 75%. If you strip out, you just go in the most recent 70 plus years post World War II, very similar. And you go to the bottom one, Michael, all periods, it's about the same. So what it's basically suggesting here is that for people would say, oh my goodness, we've had a really good run of it. Why don't I just quit, go to cash? Historically, at least that hasn't been a wise move to make.
So as the first 3 quarters of the year go, fourth quarter tends to follow when it's as strong as it has been.
Absolutely. And one
All
more
right.
thing in this chart, Michael, if you look to the far right, and again, you pointed this out to me when pre-taping here, October, right, can be one of these, and a spooky month, let's call it. If you go to 1929, everyone remembers, at least in their history books, the famed crash. 1987 happened in October, the famed crash. And in 1997, we had a confluence of issues around the globe with foreign currencies. We had embarked on a hedge fund that imploded. And you can see that there can be months when you have a blip. And I just wanted our audience to know that although we see this as being kind of a decent quarter here, that they can rear their ugly heads.
Absolutely. And hence why we've said October's caution month, right? And we want to get through the election. By the time you're watching this, October will be past. It's almost done as we're taping. And so far, so good. But we never count our chickens before they hatch. And if we get through to the election and the market has digested where it's at, there is a really good, strong probability that we'll have a solid end to the year, is what this is telling us.
Absolutely.
All right. Well, that's good to know. Hopefully, it gives people a little bit of comfort in what lies ahead, and they can focus in on holiday shenanigans, right? But let's look a little bit further and give us a little bit longer runway.
Yeah, this is a great chart here. So think about what we just went through. We went through a couple of charts, slicing and dicing seasonality, and then we said, okay, what happens when you have a really good year, 20% or more? What happens in the back half? Well, this chart, Michael, explains election years, which we're certainly in this year. More specifically, election years that have happened post-World War II. So we go through 8 decades. What does it say? If you go to the bottom, again, the median rate of return up until the election historically has been somewhat muted. It's 5.6%. You think about through October, that's 10 months. The full election year on average, so from that last period of November and December, in those 2 months alone, you tack on median average of another 5%. So that tends to be, as you said before, the great unknown becomes known. And here's the last piece. Rolling into the first year of a post-election year, it tends to be a normal year. 9.8% is close to the average going back in history. So although there's a lot of stigma surrounding elections, we believe that if we look historically going back 8 decades, that investors, again, will be rewarded for sticking with their plan.
Yeah, consistency pays off for sure.
Absolutely.
We've seen that over the years. You and I have been doing this together for quite some time. I won't talk about how many years because then people think we're old.
You got it.
Don't want that image out there right now.
No.
But this is super exciting to recognize the calm in the storm, right? And I'm gonna say we don't have huge expectations for anything regardless of who's elected. Notice this doesn't talk about Democrats or Republicans or independents, right? It counts all of them in this mix. And what it's basically saying is when we have a good year leading up to this and the economy is strong, the next year is kind of normal regardless of who gets elected to that White House. And I think to break it down into terms of what I've seen in the number of years I've been doing this, the market just needs time to digest. And by the time the new president's policies start to work their way in and we see where Congress is going with legislation, we get through next year kind of normal. And then after that, we've got to wait and see where we're going, right? For sure. This is an infinite timeline. This is really just looking ahead to the next 12 to 14 months.
So very well said.
All right. So then let's wrap up a little bit with stepping back if we can. And, I always love getting out of the media muck, I like to say, because they hone in on the fire that's burning right now. That's what media tends to do. And sometimes we get lost in the here and now, and it pays us to step back and look at the big picture. And what I have here is just simply a chart of one measure of the overall market here in the US, the S&P 500, which gives us a good sense of equities and how they performed for 2024 through this week. And even if we get a little volatility to happen around this election, we're standing in a really good spot. And we'd have to have a really significant event take place to make 2024 end as a bad year. So I just want to pause and say, remember where we've come for this year. I would not be surprised if we don't cough up some of that because this is a pretty solid year. But even if we do give some back between now and the end of the year, I think those numbers we just talked about will probably hold fast. And we actually might surpass the averages this year with where we end up, even with a 3, 4, 5% pullback, if we get that, which I just don't anticipate happening. So just remember the overall big picture of where we've come, what we've accomplished this year. I would encourage you, as I mentioned, to enjoy the holiday season this year, right? We don't plan to change portfolios much right after the election. We will keep these existing ones through the end of the year. As we move ahead into next year, we'll start to adjust to what we feel the new policy and focus and federal spending and legislation bents, where they'll go, and we'll adjust accordingly in doing that. Chuck, any final words?
The only thing I'd like to just say, Michael, is that hopefully we covered this for our investors. I think you nailed it, that we're going to know a lot more in a couple of weeks here post-election. We will pivot based on the policy. And historically, markets, once that unknown is known, tend to do their own thing. And that's what we're hoping is going to happen here as we walk into next year.
Absolutely. All right. Well, then I'm going to thank everyone for being here. At this point, I get to say happy Thanksgiving. Enjoy your time together in November. As always, you're welcome to contact our office with any particular questions related to your accounts or planning that you need done. I wish you the best, and tune in next month for a preview at what we're anticipating for 2025. Have a great day.